They are going to dump stocks. I'm your host, Steve Van Metre, and thanks for joining me today. The banking panic has sent stocks spiraling down, and as I warned a week ago, that if anything was to send stocks lower, the machines would unleash a massive wave of selling, and sure enough, they did just that. And now we're on the cusp of a second selling program as the machines look to dump stocks this week again at a point when liquidity is drying up. And when we talk about liquidity, it's not just in the banking system. I'm going to show you why mid next week, liquidity in the markets is about to dry up in a big way. Plus, we have a sponsor for today's show whose stock appears to be immune to this recent downturn. I'm going to show you why some recent FDA news could send this stock price shooting higher later this year, and why in the short term, I think it's got a big 25% move to the upside. Stay tuned for more information. Plus, check out the comments and the description below. Let's over to Goldman, where we pick today's story up and find out just how the machines are positioned and what's about to cause liquidity to dry up. And Goldman notes at their week-ending report that the peak open corporate repurchase window as buyback blackout begins. That's right, on March 16th, where 40% of U.S. corporates will be in the blackout window. Now remember, these corporate buybacks have been big supporters of the market as they dry up and go away into their blackout period. Again, remember, that's going to pull effectively liquidity out of the market as a regular buyer goes away. And this window ends, keep in mind, as of April 28th, so we've got a whole month of this to come, and these authorizations have been at all-time high year to date, and there will be decline in purchases during the closed window. What they expect is executions to drop by about 30%, and that's going to be a big hit to the market at the wrong time. And here we can see, looking at the machine positioning, now we talked about how last week there would be a big sell in the S&P 500. We saw that. It was driving the market down. Now let's look at the next week here. This from Goldman. If we see the S&P 500 just trade sideways, the machines are going to sell about 4.6 billion, and that would mean a total of about 12 billion in global equities. It's going to take a big 2 standard deviation move to the upside to get any sort of buying activity back, and it seems unlikely with the news we just saw out of Silicon Valley Bank. But if we do see a 2.5 standard deviation move to the downside, well, look at this. We're going to see 34 billion in global equity selling this next week. Over the next month, if we don't see some buyers come back in and in the corporate buyback blackout window, this becomes a big risk. Nearly 16 billion of S&P 500 selling in a flat market. We can get down to 36 billion of global equities. But look at this, in a 2 standard deviation move to the downside over the next month, we could see 174 billion of global equity selling. If you're looking for a buying opportunity and that was to happen, well, you might find it. But Goldman's not the only one selling here. We head over to Nomura. Now, if you're new to the show, this is grayed out because this is proprietary information. I can't show you the chart. I can tell you some of the things, what it's saying, and they're heading back to max short positions. TD Securities also looking to extend into short positions and take on bigger short positions if the market moves lower. So here are your trigger points. Over 4,000 on the S&P, you're looking, you see the machines coming back and starting to buy. Under 3,800 to sell here, and we're going to look at the charts in a moment. And mind you, if it gets under 3,800, the selling is going to accelerate over the next month. And again, with the corporate buyback blackout window in place, it seems likely that is now a possibility. Let's take a look at these momentum screens here and see where these machines are positioned and just what you can do to position yourself appropriately. Now, we note the S&P 500 momentum is negative. The RSI is not at oversold level yet, but it's getting close to that. 30 would put it at oversold. MACD's got a negative cross. Momentum Timer Pro warned you about this. 15 consecutive daily sell signals. We've been telling you no position on this yet due to the fact that the machines were in play here. We noticed our own report, CTA-Timer Pro, was telling you early to, hey, you need to cut your positions here, take in some of your gains, and it's moving short, telling you exactly exactly how the machines are positioned. So let's take a look at the charts here and show you where these levels are at that you need to be aware of. And here we have SPY, the largest traded ETF of the S&P 500. Here's your signals. This machine's looking to break down. You get under this 379, roughly 50 level. If SPY breaks down below that, there's your big catalyst. Machines will sell underneath that level. It's got to go up quite a bit here to get the machines back in. And how do we note that? Well, the 6-month window, you can see, although the trend now is starting to shift to the downside, you can see, even though there's this big up move in the market, you can see it shifting to the downside. Look over the last year, and you now start to get the picture of what the machines are looking like. And they're saying, hey, this is starting to slow, momentum starting to flip. We need to capture those gains that we picked up from here and here. And again, they will turn and burn this to the downside on a break here below, roughly again 378.50, 377, somewhere right in there. That is your level to watch. All right, let's take a look at the NASDAQ. And what do we see here? The RSI is at 42. MACD's got a negative cross. So again, we're not at oversold levels on a technical basis yet. Those could easily happen here next week. Momentum Timer Pro giving you 5 consecutive daily sell signals on our momentum screen. How about our CTA-Timer Pro? It's been showing you that the machines are capturing their gains. They're selling off their longs. It was giving you that early warning. What do we have? An upside target at the 21D moving average. Let's take a look at the downside target around 282 here on the chart. Let's see what's going on with QQQ. And 282 puts us right squarely back down here into the supply zone from before. There's your downside target, upside being the 21-day moving average, now acting as resistance. So if you see a breakdown below this 282 level, you look for those machines again to sell, because what did we note? They bought back big here around this 265 level to send this higher. The 200-day moving average no longer looking like support unless there's some big news in the market to give everyone some confidence early next week. Again, look for this to go down, and if buyers start to step in around this 280 level, then you've got some confidence. If not, the machines will push this down even lower. Let's talk about the bond market, because we're not getting a lot of information from these companies. They're not talking their bond book, maybe for good reason. I'm going to show you why. Perhaps they're hush-hush on that because they may be looking to add to their positions. We see TD Securities here fairly short on their positions. And here's what we can note after digging around. This is what I found. The machines are positioned like this, under 3.7% on the 10-year. They're going to buy, taking yields lower, over 4% to sell. And what that means in our current positioning is don't expect a whole lot here from the machines, but notably you see the 10-year right now around 3.7%. We could see a little bit of buying. If that accelerates and yields fall, then there will be a whole lot of short covering to follow. Let's take a look at TLT. Of course, the long bond here, momentum positive, RSI 59. MACD's got a positive cross. We've kind of suggested wait for a close over the 200-day moving average. Momentum Timer Pro's only picked up 3 daily buy signals, so it's still a little bit early. Although we do note that someone, a subscriber to the CTA report, said, hey, Steve, I bought in, I got the report, and at max short, I saw a TLT, and as it started moving off those max shorts, I bought. This thing took off. Easiest report to follow. And that's right, it's only $30 a month. Link in the description below, so check that out. So easy to follow. And yes, when you see it at max short positions and you see it moving up, that's your buy signal. All right, let's take a look now at the chart for TLT and see what we've got going on here. And again, there's that move. This was that move that we saw on the charts. Let's zoom right in. The CTA-Timer Pro picked this move up right here. And if you jumped on that and saw it start to cover the shorts as it told you, you captured that big move here. May want to take a little bit of profit. There is still the risk this thing runs into the 200-day moving average and gets rejected one more time. After that, then look for some upside potential there. Downside, obviously, we see support right here around 101, acting as a nice level of support. So it'll be interesting to see if we do get a rejection of the 200-day. If not, look for a breakout on that to begin putting some positions on if you don't have any already. Let's talk quickly here about the dollar. What do we note that, or gold, not the dollar. We're talking about gold because many of you are looking now at gold as a safe haven. We'll touch on the dollar in a moment. TD Securities, they're looking to move either direction now. The bands are getting tight. Here's what you need to broadly know from the CTA positioning. 1800, you got to get over that to buy, and I know it closed over that on Friday. Next round is selling under 1800. So the kind of the way you want to look at this, if you start to see a move over on Monday that start to move higher in gold, start accumulating some small positions here. I'm going to show you where resistance is at on the upside. If it breaks out there, then you want to go gangbusters. Otherwise, keep those stop losses on when you trade for sure. All right, let's take a look at gold here. And what do we know? It did close over 1850 at 1872. If it holds that, look, you might want to take some positions here. Again, small positions, because I think the upside here is right into this 1930s range where we saw, again, sellers in the past. If we zoom out, of course, we know a break over that takes this thing skyrocketing. But remember, we could just be seeing a reactionary news to this banking news and perhaps the market selling off. And if that starts to settle, we might see these sellers resume. So be careful with that there. And I also want to touch on the dollar here, or let's look at the screens here for gold. What do we see? Momentum being positive. Again, only one consecutive buy signal on Momentum Timer Pro, although CTA-Timer Pro did pick this move up. Remember, it was short there for a while. It picked that move up. Now you know, look for when it's at extreme positions either way. If it's extremely short, look for a move higher to take positions. Again, no position. Look for a break over that 50-day moving average, and I'd take small positions here because the dollar right now is looking to rally higher. Momentum is positive. The RSI is slowed a bit to 54, but still looking to move higher. MACD's got a positive cross. You got 26 consecutive daily buy signals. We're just saying no position. Most people don't trade currencies. This is more telling you from a risk off position, because not long ago, this was 100% short. Now it's 100% long. So CTA-Timer Pro gave you the move that you were looking for, and that's what the key point to that report is. So simple to follow. Look for those moves on one end or the other and then follow it either direction. But now let's talk about our sponsor for today's show, and that is Inhibitkase, and they are impacting patients' lives by treating diseases where it begins. Now, my friends, they are looking at a big potential breakthrough on Parkinson's. I'm going to show you what the FDA did here just recently and why I think this stock here in the short term can move 25% to the upside, and later this year could have a much bigger move higher as we get some news from their recent clinical study. Let's take a look again. You can find them, the link to their website in the description below and the pinned comment. But what they're doing is they're developing disruptive therapies and targeting neurodegenerative diseases and fatal brain infections. Again, their focus right now is in Parkinson's, and they're looking to reverse those effects of neurodegenerative diseases using their RAMP drug innovation and prodrug technology engines that address multiple indications. And again, as we know, with the boomers retiring, any sort of news, any sort of technology that could help unwind some of these problems or make it even better are going to have big potential upside in the market, as everyone will want their technology. And let's take a look at what this means from our analyst report. This also linked in the comments and in the description below. And it says here, could the recent FDA news we'll talk about in a moment send this stock potentially back to its 2-year high? And I want you to put this symbol IKT on your watch list, because I'm going to show you here in a little bit why, when we get the charts, I think there's a quick 25% move higher. And then depending on how this clinical study goes, you could see the stock go even bigger upside from there. So let's dig a little bit deeper. Again, put IKT on your watch list. And here we can see Inhibitkase Therapeutics announces FDA has lifted a full clinical hold on its multiple systems atrophy. And this is coming here. Now we go down here. Notably, what do we see? A clinical stage pharmaceutical company has developed this inhibitor therapeutics to modify the course of Parkinson's disease. If this is successful, boy, the stock is going to go straight up, and Parkinson's related disorders and other diseases. And today announced the FDA has lifted a full clinical hold on the company's plan to proceed, which is future phase 2 clinical trial. So this is potentially big news of what this company can do. So now let's take a look at 5 reasons. Again, you may want to add this to your portfolio. Again, put it on your watch list, and then let's take a look at the charts, because I want you to see not just the short-term upside potential, but the long-term as well. It's a real active chart. At traders, of course, you like to see charts of a stock that's moving, and here we can look back that we can see in 2023, it started out on January 3rd around 48 cents, and what did it do? It capped off a big 137% move by March 25th. So very short-term move in less than a month. Of course, as a trader, that's what you're looking for. Upside potential, if this thing was managed to get back to its 2-year high, you're talking a potential over 1,000% move. Of course, we would need to see probably something from their clinical phase 2 trial to do that, but of course the possibility exists. As a market valuation, they are a nano cap company, and meaning nano cap companies can move very quickly and have a change in valuation. And again, as a trader, that's what you want to see. In addition to low float, they're only trading around 19.85 million shares according to FinViz, meaning that any sort of news or any sort of buying that comes in could send this stock way higher. On top of the fact it's got strong insider ownership, 21% of the shares as of February 23rd are owned by insiders, and that is something, of course, we love to see on this show. Now let's talk about where the stock is trading from a chart perspective, because I want you to see there's 2 things going on here. From the long term, you're looking at a break over the major moving averages. We've seen this happen on stocks we've talked about on this show, sending the price a lot higher. In the short term, I want to show you why a 25% move is in the cards. Here we can see on this next chart here, we're looking at the 2-year chart. We got the volume profile turned on. And what do we note? The periods where we see it bottoming out, we see some dips, and next thing you know, it breaks through the moving averages and runs up a really high. And now what are we seeing here? A move, kind of a broad bottoming move. And what do we note? That the moving averages are getting tight here. So it could send this thing up really quick. And let's zoom in, because this move here, I want to know, as the market's been selling off, you notice how buyers have coming in here, again, symbol IKT, they're coming in and buying this stock, and look at what's happening. The 200-day moving average is compressing here. The sellers are right there. If this were to break up from this point where it's sitting right now around 68 cents or thereabouts and get up to 91 cents, this is that 25% move that I'm talking about. And you can see it on the charts. It's made this move before. A little break over the 200-day moving average in the short term is very positive. Over the long term, we know that when stocks break over their 200-day moving average, they can move a whole lot higher. Here we have in the short term, what do we see? IKT again coming back into that resistance level. A break there sends that stock up that 25% move we're talking about. Here you can see that beautiful bottom on the what are we seeing here? The 1-hour chart. We went from oversold levels and MACD's cutting higher, momentum's building up. Again, beautiful look at a short-term move here for Inhibitkase. Again, the symbol IKT. As with any stock we show in this program, of course, do your own research. We put a link to the company's website and our analyst research. Put it on your hot list and then make your decisions from there. I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.